Hello friends, welcome to a new edition of Proficient's webinar. Today it is 7th of July 2018 and I am your old friend Shumoy. As you know, we conduct this webinar on weekly frequency every Saturday, and today our topic of discussion is the overall market condition. Every alternate week we discuss about the market condition, and the other week we discuss about any topic of relevance in analysis, right, in statistical or technical analysis part. So today we will be talking about current market condition in India and the global perspective. So without wasting much of time, let us come to the global market first. Let me start with a view on the US market. As of yesterday, the S&P 500, which is the large cap index, as you can see from my screen, actually got a big fillip and rose nearly 1% higher. It closed at 2759 level. You can see the intermediate uptrend from the chart. Prices as of now are trading both above both the moving averages of 50 and 200-day revolution. On this chart, you can see the 50-day moving average as the blue line and the red moving average as the 200-day moving average, right? So as long as prices keep moving above these moving averages, and you can see the higher bottom formations, so the short-term and intermediate uptrend is still perceived to be upward, especially unless there is any major bottom violation, which has not occurred as yet. And 2780 regions is the last intermediate top, which occurred in second week of June. So that will be a major resistance going forward. But if that is taken out, then the intermediate uptrend will assert itself with much more strength. So the overall view in global perspective is bullish, and let's see what is happening in the dollar index. Dollar index is an important factor in determining the strength of commodity markets and bond markets, along with equity markets as well across the globe. And as you can see, dollar index has in fact come lower this week. We only had 4 trading sessions this week because of American Independence Day holiday. There was no trading on 4th of July. So in the past 4 sessions, although dollar index has came down and it has taken a support at its 50-day moving average, but the overall trend is still upward in dollar index, right? You can see it is trading above both the important moving averages, and the series of higher bottoms are still visible. The major breakout occurred in last week of April, and that uptrend is continuing. Nearest support is seen at 93 region, so unless it breaks that region, the short-term uptrend will survive, right? So if dollar index continues to remain strong, what can we expect in the commodity sector, right? Because most of the global commodities like crude and gold are denominated in dollar index, we can expect to have some downward pressure in the commodities. This chart represents the prices of gold, and as you can see that gold is in an intermediate downtrend. This is the daily chart of gold, and in the month of May, gold actually broke below its 200-day moving average, and that is the official beginning of the bear market, right? It has been extremely weak, although in the past 2 days gold has managed to recover some lost points, but still it is trading weak, right? Last closing was at $12.55 per ounce. So you can see the short-term lower top, lower bottom formation, and any upward rise in gold will be selling opportunity, and that will be asserted if dollar index also goes higher, right? uh, Dollar index made a high yesterday at 94.24 region. So if dollar index goes higher, if dollar index violates its Friday high at 94.24 region, and gold violates this low of 1253, roughly $1250 per ounce, so that will be another signal that the overall downward trend is likely to resume, and the previous bottom 1240 will be the immediate target for gold in that case. And if that is broken, then gold will head even lower. What happened in crude oil then? Let us look what happened in crude oil. Crude oil made a low $14 per barrel region yesterday, but it per barrel region, and if crude comes to that level, it will be a good opportunity to buy. But for the time being, one can keep a short position, keeping the stop loss at 74.58 region. So that's our outlook in crude oil. So short-term outlook for crude oil is weak, and the longer-term outlook is extremely bullish. So these were our view in global markets. We gave a bullish opinion in global equities, and some short-term weakness in crude oil and gold. Now, having said that, let's come back to our domestic market, and whatever you can see here on my chart is the daily diagram, daily chart of Nifty, how it has fared in the past 6 months. You can see it from my chart. One thing is pretty sure, and one thing is pretty clear from this chart, is that the level of 10,800 to 10,840 region is an extremely strong supply region for Nifty, right? Nifty has not been able to surpass or go above this level since past some 2.5 months, right? Although trends are definitely upward, make no mistake about that. Trends are upward in Nifty. It is our own domestic market. Why I'm saying this? Because not only prices are staying above 200 GMA consistently, we can also see the series of higher bottoms, as in the 3rd week of May or the 4th week of June. These are consistently higher bottoms. So unless this series of higher bottom is broken, say for example, the last bottom made on 28th of June was at 10,589 on closing basis. So unless this level gets broken, the series of higher bottom is actually continuing. So there is no point to see any weakness in Nifty as long as this bottom is holding. On the other hand, if Nifty really manages to stay above or go above 10,840 sometimes in near future, then that will give a big fillip to the market, right? That will reassert the strength of the bulls in market, and Nifty in that case is very likely to go higher and challenge its January top, right? Which is at around 11,100 region. in my opinion, these things will be coincided that this region for S&P, if 2760, right? Let me plot this. Yeah, 13th of June was the high made by S&P 500, and it was at around 2792 region. So if S&P goes above 2792 regions, Nifty is very likely to cross this mark of 10,840, and in that case, that will be a strong buy signal in our index, and the target will be 11,200 approximately. On the other hand, if Nifty violates 10,580, then below that point, I am not recommending any long position to hold, and the 200-day moving average right now is also residing at 10,455. So in that case, that will become a major point of support. If 10,450 region gets broken out, then whatever I'm saying will be void, and we have to relook at the market and take a fresh opinion. So as of now, view is bullish, and nearest resistance is 10,820 to 40 region. Above that, prices are likely to challenge the previous high of 11,1180. Having said that, let us come to some of the stocks. Those are likely to outperform the market in the short term and in the intermediate term. First stock that I would like to buy, or I would like to bring your notice to, is actually TCS. Look at the overall dynamics of the chart. You can clearly see the series of higher bottoms, which is a trademark of any upward trend. And this yesterday's closing price at 1912 was in fact another lifetime high. So there's nothing much to say about it. TCS is a clear buy. Maybe there will be some fundamental reason to buy as well, because there is a rumor in the market that it will soon be giving some buyback options, but that things apart, the chart itself is bullish, and we will like to trade TCS from the long side. Last important bottom was created at 1809, approximately 1800. So that will be our stop loss for TCS, and any pullback will be a buying opportunity. Even if there is no pullback, we have to buy TCS. In fact, large cap IT stocks are in fact generally good. Not only TCS, Infosys is also good. Infosys is also good. Yeah. On Thursday there was a big correction in Infosys, but these corrections are extremely healthy for the longer term uptrend to survive, to continue. We have to keep a close eye on this chart. I'm not recommending to buy as of now. Here we get an important case of our triple screen trading system strategy when the overall trend is up, but in the past 3 or 4 days prices came down heavily. It was a pullback, and if this pullback actually subsidizes, if there is no more additional selling pressure from the bulls, then chances are very high that the primary uptrend will reassert itself, bulls will be back, and we will have a buying opportunity, and Infi will go to excess to 1350 where it used to be 3 days ago. So this will be a buying opportunity, but not right now. Look at the stochastic in the topmost pane of my screen. The stochastic is showing that there is some more steam left in the current downward trend, and if the prices continue to stay here for a few more days, then that will be strong enough reason to buy Infosys. But I'm not recommending to buy it right now. You just have to keep a close eye, right? And when maybe you will see the first signal that prices will be going above the previous day's high. Yesterday's high was at 1302. So if prices go higher than 1302, or prices come lower but did not break this low at 1240 regions, then that will be another signal that the overall uptrend is still intact, and that will be buying opportunity. So you just have to keep an eye on Infosys. Maybe we will get a better buying opportunity, but no doubt this is a strongly upward trending stock. Maybe not as good as TCS, but definitely a strong upward trending stock, and one should buy Infosys on any weakness like this. Let me show you the chart of Bajaj Finance. The chart is extremely strong, as you can see. Prices are trading above the 200-day moving average. So Bajaj Finance is also a strong upward trending stock. One can keep a buy position with a stop loss at around 2275 region. That was the last bottom made. So if 2275 survives, prices are very likely to continue higher, and the uptrend is likely to continue. An important stock and a bit different is Maruti. You can see the daily chart there, but you may not be able to find any uptrend here, right? Now this is a bit interesting because Maruti is actually in a primary uptrend. I'm just helping you to see that uptrend. I'm just going one step beyond and making the chart in a weekly time frame. And this is the weekly chart of Maruti. Now you can see the higher bottoms, and last week saw some extreme upward, extremely strong movement on part of the bulls, and it tore away all the resistance of some say 9,000 region and closed at 93.70. So there is a very strong possibility that Maruti will actually continue to progress higher and break the previous high of 99.96 and go to the 5 digits. Maybe it will be possible this week or few weeks or few months later, but this is very much strong probability that the overall uptrend in Maruti will emerge. At least that is what is being seen from the weekly time frame of this chart. Last but not the least, about our buying candidates is Hindustan Unilever. I have shown this chart many times in this webinar, and this FMCG major is continuing to go higher. So this week also there was some good movement, and last bottom was made at 1600 level. So any pullback will be a buying opportunity in Hindustan Unilever. Overall stop loss will be 1600 level, and there is a high probability that Hindustan Unilever, or in fact many other FMCG stocks, is likely to go higher. Now, one stock that comes to my mind, although I did not intend to show you here, but it actually made a nice movement yesterday, and that is Ashok Leyland, right? You can see the 200-day moving average here. Prices are actually still trading below the 200-day moving average, but just like the case of Infosys, we also have to keep a close eye on Ashok Leyland as yet. After making an important top at 165 region, Ashok Leyland actually underperformed the market for the following 2 months, and it came as low as 124 yesterday, in the last week, and from there it actually managed to show some smart movement and gave some 6% return yesterday, and actually challenged its 200 EMA. So at this point, this bottom that was made in last week of June becomes very important, and unless this bottom is broken, which is at 124 level, there is a possibility that this pullback may be nearing an exhaustion, right? The bulls may be getting more strong in this chart, and the bears are maybe getting weaker. So one has to keep a close eye, but 200-day moving average is an important make or break zone. If prices really manage to go above the 200-day moving average and manages to stay there for a few days, then Ashok Leyland will be a buying opportunity, definitely. Overall stop loss will be 124, and the target will be 170 in that case, right? This pharma stock, one should keep an eye on this. This is Glaxo, and this pharma stock is actually a leader in its sector. There are some good stocks like Lupin, like Dr. Reddy's. These are only short-term good stocks. But GlaxoSmithKline is actually outperforming all these major pharma stocks, and one has to keep a close eye on this. It actually made a low at around 2770, and from that low, it broke out this week. And there is a high probability that this pharma stock will continue to progress higher, and one can keep a buy position with the stop loss at 2770. Prices are comfortably above the 200-day moving average. And what also catches my attention is the previous long downtrend, right? The downtrend is actually nearly 18 months long. Only once or twice in these 18 months, prices actually went above the 200-day moving average. But this time it is more credible. And we can also see the series of higher bottoms here on daily chart. So there is a possibility that it continues to go higher. And if it manages to go above 2900 points, 2900, that will be more certain, more confident that the longer term uptrend is really asserting itself. And one old horse is Page Industries. This stock is actually wondering all of us. The stock is pretty high priced, but I'm not looking at the price. I'm just looking at the chart pattern. I'm just looking at the trend itself, and that is pretty strong. The longer term trend is extremely strong, as we all know. So I'm not opening the chart. I'm not going to the left. What happened to the right, I'm only concentrating on that. Yesterday's closing is at 28,440. Overall stop loss will be at 27,000, right? So keeping stop loss at 27,000, if you can buy it, then chances are high the upward trend will continue. So these were the upward trending stocks. They are likely to outperform the market if Nifty crosses 10,840 region, sometimes early or later next week. But not all the stocks are expected to take part in the bullish movement in Nifty. There are many other laggards, and these laggards will be good shorting opportunity. And we also have to know these laggards where some shorting opportunities may appear. And the topmost of them continues to be Tata Motors. This week it made a low at 252 region. But look at the stochastic, it is still close to its oversold region. So I'm not recommending to sell it right now. Wait for the stochastic to go to the overbought region, which is above its 80. Whatever happened in the second week of June, I'm expecting something like that. Prices are already below the 200-day moving average. The series of lower tops are being visible on this chart. So there is no doubt about the longer term uptrend, but just wait a bit and let the stock to go to some level of 280 or 85 or like that, so that stochastic actually shows us an overbought region, and that will be the point to sell. Not right now. I'm recommending to sell. ONGC, extremely weak stock. As you can see, yesterday also some strong sell-off ensued, and it is actually trading near to its 52-week low. So a violation of Thursday's low will be good selling opportunity, which is at 154. So one can keep a short position if 154 gets broken. The same sector, IOC, it is also a very weak stock, but let the stochastic go be above its 80 mark when it will be shown that the stock is overbought in the short term, and that will be a selling opportunity. Among the metals, Vedanta is extremely weak and still a shorting candidate, but we also need to see some action and prices to go a bit higher to sell it. So this is also a selling candidate. We will have to keep a close eye. From metals, there is Hindalco. Prices are trading below the 200-day moving averages, and also the stochastic has turned down. Any violation on closing basis of 218 will be good opportunity to sell. Overall, this bottom at 200 will be the target, longer term target for Hindalco. These were the large cap stocks from Nifty 50 that I expect to continue lower in case Nifty fails to go above the resistance of 10,840. I will also like to show you one or two stocks in mid cap. Those are extremely weak. Shriram Transport, for some fundamental reason, is extremely weak, and you can see in this chart the downward gap that occurred between 3rd and the 4th of July. This is a sort of breakdown gap, right? This gap says, let me show it a bit more clearly. As you can see, I have located this February bottom here, which was at 1261. So this February bottom was supposed to be a support level, but this support level not only was violated in Shriram Transport, but it was violated with a gap. So this is a breakdown gap which we have to identify, and this gap, this kind of breakdown gap, a range breaking gap, suggests that there is much more fuel to come in that direction, which in this case is bearish direction. So prices are very likely to go lower, and any pullback to this region, any pullback to the resistance of 1225 or 1220 will be a good selling opportunity in Shriram Transport Finance. And another stock from mid cap, it is also, which is the Mangalore Refinery. We call it MRPL. This is also a selling candidate, but as you can see, stock is extremely oversold. Although the downtrend is pretty clear, but the stock is extremely oversold, and we need to wait for the stock to rise a bit. And here also you can see the breakdown gap here, like the one we see in Shriram Transport. So these kind of breakdown gaps that occurred in the last week of June are extremely strong, are extremely they're extremely meaningful to say that there is much more downward steam left in the stock. So any pullback in Mangalore Refinery or MRPL is also a good selling opportunity. So these were the stocks that I intended to show you, some long candidates, some short candidates, and there is a brief recap. If Nifty manages to go above the 10,840, Prices are very likely to challenge the all-time high of Nifty, which is at 11,180 regions. If that happens, then TCS, Infosys, Bajaj Finance, Asian Paints, Maruti, Hind Unilever, all these stocks are extremely likely to outperform. But if that does not happen, if Nifty again takes us resistance at 10,840 region and it comes down, then Tata Motors, then Shriram Transport and the energy sector stocks like ONGC, IOC, Hindustan Petroleum, and some metal stocks like Vedanta, Hindalco are likely to go down. So these were our view for the next week, and I hope you will trade accordingly. Always use stop loss, always use risk management, always use proper diversification to reduce your risk, and mm, let's enjoy trading. And I hope you have enjoyed it. We will meet next week with a new topic. So goodbye for now.